Dear subscribers, thank you for watching the video and subscribing to the market chart pattern newsletter. So we'll take a look at the markets. As always, this video is for educational purposes only and it's not a financial advice. Yesterday we did a market recap and we had drawn a pattern formation. In fact, for since the beginning of this week, we are actually following the market developments and uh, not the video yesterday, but the video that I did the day before. We had actually drawn this ABCD pattern and we were looking for a market to rally. And then I had drawn, I believe in yesterday's video, we had come up with levels. We were watching for the market to get up to the 38.2% to about 50% level, and and then correct lower from there. So this is the pattern formation that we were expecting the market to follow, and lo and behold, this is what the market has done. And I'm going to put yesterday's video's link as a reference as well, so you should watch the post I did yesterday to be able to understand how we came up with the levels that we were watching. It's really interesting how the market is actually going through its correction. It's pretty orderly. If you yeah, there is a lot of volatility, but the selling is actually pretty orderly. So one of the things is that when we came up with these levels, it was just a retracement. So we were thinking that this ABCD had formed the first leg for this corrective pattern, and then we might be another leg, which is going to be this BC swing here. This in the red, I have not labeled it as possibly its corrective leg higher, and then a final leg we get the CD where the market comes and completes its correction. So there's a possibility it's a pretty big move today, and tomorrow is of course Friday, so the end of the week. The market is down a little over 100 points, minus 1.56 percentage points. And this move on the 10th of October was actually a bigger move. Which is minus 2.71%, and then there was just no follow through. So the chances are the market did take this low out, that there could be a further move lower, and we get down to this 23.6% Fibonacci retracement and complete this leg lower. So one of the things about this pattern formation, pattern recognition, is that we were able to call this lower right here. We were able to come up with the retracement levels the market is likely to get up to, and the market has actually followed that as if it were a plan we were putting together for it. And of course, they say the markets cannot be timed, and time again on this channel we have shown how we can actually pick really nice turning points in the market. Of course, we don't get everything right, and usually it is my fault that I missed something, but in the short time that we have been here, you will have seen a number of turning points that we have picked in the marketplace. So this is what we are watching, and I think what's happening is there's of course a lot of volatility in the market, but early next week, next Wednesday, Tuesday, Wednesday, Thursday, I think we should be able to form some sort of a bottom right here and rally, start a perhaps a Christmas rally, the Santa rally could start. That's the kind of pattern formation we were watching for. The market could get down a little bit lower to about 64.30. Believe it or not, it's only about 100 points down, and this market can easily move 100 points a day, 100 points a day. Okay, now this was the S&P 500. Let's actually also take a look at the S&P 500 futures, because this is where we were carving it out yesterday. And there we go. We had come up with this 61.8% retracement level, 50%, 61.8% retracement level. The market went right pretty much to that level, wasn't able to go any way much higher, and then we have seen this move to the downside, minus 2.15%. Now, one of the things for the corrective moves, the bear moves, is that the sellers are actually lurking around at the tops of these levels, and this is where when it hit the 61.8% retracement level, it actually found sellers which were just lurking around there and waiting for the market to get down to that level. Now, the other thing that I pointed out in yesterday's yesterday's video was also that the market is down in terms of the futures minus 5.79 percent. However, this is not the biggest move. The biggest move, the decline that we have seen in this entire move higher, has been about minus 7.31%. So from a symmetry perspective, in terms of percentage, we haven't actually reached that level. But in terms of the absolute, I think we have exceeded that level, so that also keep that in mind. Okay, now let's take a look what is happening in the Nasdaq 100. This is the NDX, and NDX is very close to hitting this 23.6% Fibonacci retracement, and it has now completed this ABCD pattern. So we have pretty good support in vicinity from coming from a confluence level of these two, the ratio, the 23.6% Fibonacci retracement, and then the ABCD pattern nearby. So I think let's see how the market is actually going to perform tomorrow. But really big move because of Nvidia. This is in the news. We just believe in the patterns, and I think it just hit one of those retracement levels, minus 2.38%. And then if we take a look at the futures, because on the futures we had drawn our levels yesterday, and you can see that it was a move right into the 38.2% retracement, and the market has moved lower, completing this blue ABCD, taking out these lows as well, and the market has thus far done about minus 8.76%. And previously this move was minus 8.82%. So now it's in the vicinity, and I think tomorrow will be really interesting what the market is actually likely to do in terms of price action. So we'll be watching that really carefully. Now let's take a look at the interest rate markets as well. So let's take a look at um, the 2-year treasury note, and what we can see is the yields fell actually. So the market, the stock indices, they fell, and the yields fell as well. And the on the 2-year, the yield was down minus 1.59%. Now what we believe is, what we think is, based on this pattern formation that we have been following for a long time, the market would get down to about 3.2 to 3% on the 2-year treasury note. So looks like we might get a rate cut from the Fed in December. By the looks of it, this is how this market might be panning up to, because it found resistance right from the 38.2% retracement. And let me actually move this a little bit there so we have more space. Actually, I'll get rid of it. You can see that it's just acting as a ceiling. It has hit it one time, two times, and this is today is the third time, and it closed below the 20-day moving average. So it looks like the momentum is building to the downside, where the yields are likely to move a little to lower to 3.2 to 3% on the 2-year treasury note. And then what we have seen is where the yields had been actually creeping higher and higher and higher. And what we are looking at now is basically the 10-year treasury note. The yields hit the 200-day moving average. Did not like today, and they were down really about a half a percentage point. So it looks like the 10-year is also getting impacted. Maybe the yields are now getting ready to move lower. And if we just take a look at the concept of symmetry, we can see that this is about a symmetric move, as much as what we have seen over there in this previous bigger rally, and then it just failed. So right about there. And the TYX, excuse me, that was the 30-year note, not the 10-year. This is the 10-year note, and what we can see in the 10-year note is quite similar picture to what we are looking in the 2-year treasury note. And here you can see that there is resistance. There was a chance the market could actually get up higher a little bit to this 38.2% retracement. And the one that I should also draw one from is right here, this level. And let's see where this market is. Bang on to the 38.2% retracement from this key level, very similar to the 2-year treasury note. And yeah, if it gets if it takes out the 20-day moving average, which is this blue line, and then I think it's getting set for the rates to move lower, and we could in fact see 3.7% on the 10-year. So quite interesting development. stock market fell today, pretty big fall, and then we are also looking at the interest rate markets as well, which are looking to perhaps getting ready to yields to fall by the looks of it. We'll see. Now let's have a look at the US dollar. So the US dollar probably is in this channel formation, and we could see a higher dollar to about 101, and I think after that we could see the dollar actually give up the gains. By the looks of it, today it was only up 0.1%, although intraday there was a lot of volatility, so we should be watching this one carefully whether it forms a double top. There is a possibility for it, however the momentum is improving because the price of the 20-day moving average. So we're watching this. 101.15 has been our target. It might get there, might not, because of a potential double topping pattern formation right here. So we're watching the price action in this. And then on the flip side, if we just take a look at the Euro USD, so the Euro USD, of course, as the dollar strengthened, it's moving lower, but it's also finding support from 78.6% retracement. This was one of the reasons that I'm thinking that, yeah, maybe there's a possibility the dollar comes under pressure. The main reason is that we have had this a symmetric move. This is the market symmetry. Look here. These moves were symmetric, and then the market has shown a a upward momentum. So that's one of the reasons that I'm getting a little bit cautious on the dollar rally on this occasion. And then let's take a look at the Japanese yen. Here we go. Wow. Yeah, I thought it might just go and try to sweep this high. We'll see. It is pretty strong, very very strong. 20-day moving average above the 200-day moving average. Look how big the gap is. Very very strong, very very strong price action in this. Briefly, let's take a look at the gold market. So the gold market, it had this big rally. Now we were actually able to capture this for you guys in the previous notes and the posts we have done. It came down right into 38.2% retracement from this low to this high, rallied right into 61.8% retracement, and there is a possibility what we are looking at is an ABCD pattern formation. The market could get down to about 3750, possibly even to 3600. That remains a possibility for the gold market, but 3750 certainly remain possible, and that's the kind of corrective pattern that we have had here. And I think the market is likely to resume its upward ascent, but we are going to see a period of consolidation after such a massive run since the breakout in August. An ABCD formation like this is perfectly acceptable in this kind of a bull move that we have seen, and we certainly saw a ABCD corrective pattern right here, so we could repeat something like that. However, on the silver, it's a different kind of a scenario, because it looks like, by the looks of it, is kind of a double top formation. Watching this market is just consolidating in silver. I don't have much further target for silver right now. However, one of the possibilities that we had previously looked at is if the market is indeed in the CD formation, which we'll figure out quite soon on the daily charts, then we could see 60 to about $75, even possible $73 on the silver. That is one possibility I'm open to, but we have to wait and see whether these lows are taken out at the 45 level or not. Okay, now let's take a quick look at the Nvidia as well. Okay, don't want the video to get too long. Really, it opened up with quite a big gap and then closed to minus 3.15% down. So that's a very very interesting price action. It looks like the sellers, they were just waiting for a rally to sell their stock, and this is what we have seen as one of the bigger one day sell-offs that we have seen in Nvidia, minus 3.15%. This one was minus 6.2%, so not the biggest one, but then that also marked a corrective move to the downside. And we know that Nvidia is really heavily weighted in the indices, and if in Nvidia continues its downward descent, is going to impact the indices, especially the Nasdaq 100 tech heavy index. So thank you very much for watching the video, and if you find it of educational value, then please do like the video, share it on Substack, restack it. That really helps the newsletter and all the work that I'm doing. And also, personally, it tells me that it just encourages me to bring on more content for you guys, because it just gives me feedback that subscribers and the people who are on Substack are actually finding this material of educational value and useful and learning from it. And that's a big thing for me, and really encourages me to keep on producing more and more content for you guys. So thank you very much for watching, and good luck, good trading, and speak to you guys soon tomorrow.